Hello everyone, how's it going? In this video, we will talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through a very volatile swing recently, and one of the most talked about and sought after stocks has been Palantir. So in this video, we will go through the company, about what it does, what it represents, what it means for me, the recent price actions, the financials, and my recommendation regarding if you should buy, sell, or simply hold it. Before we begin today's video, I'd just like to make a brief disclaimer. My videos cover my opinions about what's happening and what's gonna happen. They're not investment advice by any means and should be watched for entertainment purposes only. No one can predict with certainty the future, and they're just our best guess about what might happen based on what we have on hand. My videos are prepared either immediately before the uploading or a few days before they were released on YouTube. Some of them no longer correspond to the latest price actions, but nevertheless, they should still be relevant enough to analyze the subsequent price tendencies and to improve your decision making. Also, the videos aim to cover the securities as broadly as possible by covering the fundamentals and technical aspects. Other than the price action and latest news events, the long-term tendencies, the shareholder composition, the fundamentals, and other market behaviors will also going to be covered, because they all affect the decision about if we should buy a security, how much should be bought, and whether it should be bought at the current level. With all that being said, let's begin with today's video. People have been very hopeful, let's put it, with what it may be able to deliver not just to the investors, but to the economy overall. Data is one of the most precious and least understood resources that corporations have, and what Palantir wishes to accomplish is to make use of the digital footprint left behind by users and stakeholders in order to help companies to make better decisions, to optimize the company's operations, and to increase their bottom line. Palantir is also known to be very well introduced into the public sector, with some of their biggest clients being government departments in healthcare, defense, and law enforcement. The reason why this makes Palantir unique is because those contracts tend to be long-term, with guaranteed cash flows, and are testament of deep relationships that may enhance in time. With that being said, the very nature of the company's business model has put Palantir in the tech sector and marketed as a growth stock that will use its resources to grow and to give investors exponential returns in the years to come. This is typically something that investments, in startups or in tech would promise, and that they have also delivered on some of their promises. For one, the revenue of Palantir did grow over time, and they have diversified their activities into the private sector and upgraded their software platforms ever since. They have, however, also been, set back by another few things. Despite the fact that Palantir has been in operations for many years, its operations are not profitable overall. The total cost of doing the business is still higher than the total revenue. This has been one of the biggest hurdles preventing its shares from reaching higher levels. Now, Palantir is also having an overexposure in the public sector, making it vulnerable to spending cuts, and when times are difficult, this is especially negative for Palantir. The third hurdle is its own reputation. Palantir deals with data, causing potential privacy concerns regarding how they're obtained and how they're used. In fact, the company's mixed reputation has been concerning in conference calls. Karp, the CEO, stated that many of their clients hated them, but they don't have a choice but to deal with Palantir. These statements are alarming for me, and I think that efforts should be applied to improve the brand image and the brand's reputation. The final issue is the unfavorable market trend. So, Palantir, just like any other growth stocks, requires a favorable investment environment in which investors are optimistic about the future and therefore willing to invest into the future companies, like Palantir. With the recession looming around, the raising interest rates, the quantitative tightening, and especially of US dollars, these are not things that would favor people to put money into companies. like equities of companies, and amongst that, especially like the growth stocks. So suffice to say that Palantir has been having a lot of downward pressure lately, and that those issues will take time before being resolved. In the meantime, the gravitational pull would still be downward. So, over the past few days, Palantir's stock price has been put under renewed pressure, partially due to the market trends, but also because the company's own news regarding the SPAC investments. Not all of them panned out very well, and these failures have put some additional pressure on Palantir's market valuation. Despite this, there are recent articles that came out suggesting that Palantir's value can still grow significantly in the future, because it has free cash flows, positive growth, like the positive gross profit, and a scalable business model. Nevertheless, given the recent price action, I would highly recommend to wait for more favorable market conditions before going in, simply because the stock might go through another rounds of sell-offs before things get better. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We already know that Palantir will not be profitable for another few years. This has already been priced in. We know that Palantir is in a highly sophisticated and brain cells intensive industry that aims to become the analytic dashboard for some of the wealthiest entities in the world. The true debate is whether Palantir itself can stand the test of time from a technical perspective, and whether the market will believe in its potentials to become something much larger and important for the world economy than it is now. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7 and now below $7. Much of this is due to the overall market trend, and the rest is caused by the doubts on the company's growth potential, as well as its business model to work with government agencies. So as we look at Palantir's financials, the first thing that jumps to my eyes is the gross margin. It is positive, and this is very good. Above all else, this is a very good reminder that the company's core business seems to work. It is true that the revenue has been growing slowly over the past few quarters, which, prompted some worries from investors, but the fact of the matter remains that the gross profit is positive, and this means that the main issue now is to scale it up and to diversify its operations, which can solve the problem once they reach a critical number of clients. We should remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, suggesting that Palantir's clients are relatively robust, which is a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with positive cash flow at the end of each quarter. Ever since Q1 of 2021, it means that the pressure of Palantir to go through rounds of share dilutions is relatively low. Not impossible though, of course, but relatively low, which is a good thing for the shareholders. Another significant aspect to consider would be the liabilities that Palantir has on books. They currently have around $900 million of liabilities, mostly constant and slightly decreasing even compared to, if we compare from one quarter to another. This is also very reassuring, as this would suggest that Palantir is keen on having a low leverage, which decreases the solvency risk. Regarding the shareholder composition, about 35% of their float is owned by institutions. This means that there is a significant endorsement and support from money managers, but they're still outnumbered by the retail side, meaning this is going to be a company that you can invest in, but do expect heavier volatilities and heavier volume than usual. It suggests that Palantir is good for investment, but it's also good for trade and the swing trades. So currently there's around 4.2 million shares shorted against Palantir. It's a lot. It takes about 3 to 4 days to recover. But with that being said, I also think that Palantir currently has a certain volume of short positions against it because people genuinely believe that Palantir is probably going to have some sort of headwind against it. I don't think that they are a concerted short operation. So based on my analysis, I believe that Palantir is a stock that is worth the hold for the long term. But now might not be the best timing to increase the purchase rate, as the market corrections are likely to continue for the next few months. Nevertheless, having an allocation ready for Palantir and to prepare for an eventual recovery is certainly something that we can start preparing now. I would recommend an exposure between 3 to 5% of your portfolio